Good morning, traders. Today is Monday morning, May 16th. Hope you all had a great week. Today we're going to talk about the markets as usual, where we can expect price action to move from here on a broader scale. I'm talking NASDAQ, S&P, Dow Jones. I'm going to talk about Bitcoin and the reflection of the price from the broader markets in Bitcoin. A little bit more about stablecoins and the risk associated with stablecoins. That's been made a clear impression on our minds over the last week. So I want to discuss that a little bit further just to make sure, if you are not yet aware, based upon what happened last week, what can happen with stablecoins. And we'll look at a new chart that I have found that will help, kind of determine what future price action might look like on our broader markets and crypto. All right, let's get started. We're going to start at the top here just so I can keep all my thoughts in order with the dollar. You can see bull flag, bull flag, bull flag, and broken out to the upside every time. Another bull flag forming right here. All right, so it looks like we are going to go and touch this descending black line, which, if I zoom out here on the weekly, you can see we have not touched since 2002, February 2002, and slightly we touched it in June of 2001. All right, so the dollar is strongest it's been in many years, and we're looking to touch a descending trend line now that we have not touched in 20 years. That is pretty amazing from from everything that seems to be happening in terms of Fed printing. You wouldn't think the dollar would move up, but in fact the dollar is still considered the safe haven asset and still remains globally dominant. In addition, J. Powell and company are raising or taking action to raise the interest rates and put deflationary pressure on the market and keep the strength of the dollar up, while the rest of the global players are following suit. They're not following suit as fast, so that keeps the dollar at a dominant price level. Of course, this is all concerted efforts as these world leaders meet at their economic forums and such. Dominant players will be determined, and everybody just kind of follows suit so that the overall game plan, whatever that is, can be achieved. All right, so when the dollar is up as it is and the VIX is up, now of course today the dollar is down a little bit and the VIX is down a little bit, so we might see a little bit of up movement or neutral movement, because this is not much at all. This is barely registering. The dollar is only up 0.07%, and the VIX is only up 1%. So that's nothing. But the VIX is forming a bull flag here. All right, so I expect the VIX will also touch a price level that we have not touched for a few years, and that's up here at this red resistance line at 37. You can see this bull flag forming right here, and I do expect we break out to the upside. So that means more fear is in store for the markets, and it all correlates with the data that I'm seeing. The dollar can go up some more, the VIX can go up some more, and according to what I'm seeing on these charts here, the markets can go down some more. I've got a support down here on the S&P. The market still can drop another 10%. All right. So we need to be aware of our levels and where the market can still go. There still can be good amounts of selling pressure placed on the market. I've got a gap here on the Dow way down here below that 200-week moving candle. I don't know that we'll fill it, but I've said that before. I've said that about Bitcoin. I've doubted what the charts are showing me. Should not do that. Okay, so that's what I see on the markets. Dollar VIX can still go up. Markets can still go down. It's looking very clear to me. Let's take a look at Bitcoin dominance. I haven't done that in a while. Okay, so we've got a flag here. Looks like we had some consolidation. We broke into the upside of this triangle, and we can determine where we're going to go here by measuring the distance. Let's just see where this takes us. We broke out right here. Okay, so it looks like we're going to go to that 100-week moving average way up here at 51%. That's some crazy movement, guys. A lot of times I doubt what I'm seeing on these charts, and then it becomes reality. And that's proven by this whole thing that happened with my head and shoulders patterns. You remember this, guys? I've said this over and over again. I did not think this would play out, but in fact it has. Look at our target down, guys. Our target down here is this ascending red trend line. Where did our wick down hit on Thursday? The ascending red trend line. In my opinion, I consider that target met. Does that mean we won't come back down and revisit that area, or even the price level of that target, which is around 23,000? No, it does not mean that. In fact, if you're looking at this Bitcoin chart correctly, this could also be another bear flag, indicating that we will go down further. All right. But on the positive side, remember this purple line that I spotted on Friday? I drew it down from here, spotted this on the fly. All right. This has acted as resistance over the weekend. And on Sunday, we broke up and above. And now what's happening here is we're coming back down to test the top of that as support. And it's possible within the next 2 weeks or so, we can move up. Now, how is that possible when everything that I'm seeing on the markets indicate we could go down further? Well, let's just say the market takes a pause and moves sideways. Let's say the dollar takes a pause and kind of rest on this as support here for a few weeks, which could very well happen. All right, so if the dollar moves sideways, if the VIX can still break to the upside, or it could just go sideways like it is kind of doing here. And if the S&P and all of these other markets kind of, the S&P can come up here and hit its head on this resistance before it goes down to that level that I drew, which is 10% below us. It can go up as well, hit its heads on that before it comes down to this support. So that would align with what I'm seeing on the Bitcoin chart. All right, upward movement prior to downward movement. And that's kind of what I am anticipating. So I think over the next, the bears have reached a point where they just need a rest, a point of exhaustion. So I can see us moving up here, hitting our heads on what was long time, multi-year support, and that being big enough resistance that we just come crashing down, and maybe we go all the way down to 24,000. Maybe we go lower than that. But that aligns with what I'm seeing in the broader markets as well, guys. So don't put it past Bitcoin. Let's take a look at the weekly chart. What's the weekly telling us? Remember, I said on the weekly, this candle, which closes on the 23rd, this last red candle here. All right, so we have till the 23rd. What is it today? The 16th. All right, so the 23rd is next Monday. This candle, which has just opened, needs to stay below this neckline for confirmation of bearish price movement. If we come all the way up here, if we close above this in this area here, then we become bullish again. But I believe that this ascending purple line is correlating with the multi-year black line that I had drawn. All right, so that would mean that we pop back up above that. I don't think that's going to happen. That line has just been so strong in terms of support or resistance over the last couple of years that it's hard for me to believe that we'll just pop right through that. I think we hit our heads on that and come back down. All right, so Again, that's a long ways up at this point. It feels a long ways up at least to pop back above that 100-week moving average, which currently sits at around 36,000. Actually, what is the 100-week exactly? Yeah, 36,640, and taking us into that whole area there. Okay, next chart I want to show you is this new chart that I found. Before we get there, we're going to talk about stablecoins. All right, so obviously the trust and confidence in crypto space has been shaken to its core with the crash of UST, Luna, and Terra Luna's projects, their stable coin. All right, UST backers who expected to earn interest on the backing of their, the stable coin here at $1, not only lost all that interest, but lost everything that they had put into this project. All right, and so now UST is down to 5 cents and continuing to crash. I think the Luna project is all over, and we just have to write off our losses, guys. This is just one of those catastrophes, those black swan events that nobody really expected. Some people saw it coming, but nobody really expected it to come. So that takes me to our other stablecoin, Tether. I want to show you something here on the dollar, or in the daily chart. This is the Bittrex to USD. You guys see this big old wick down here? Over the weekend and since Thursday, Tether has also become depegged from the US dollar. Now, excuse me. A lot of people think we're getting into conspiratorial area when we talk about potential crashes in our stablecoin. And yes, I have to admit we are. And the reason why we're getting into conspiratorial territory is because Tether refuses to be audited. So what happened here on Thursday is you can see Tether wicked down all the way to almost 55 cents as it also became depegged from the dollar. Now, instead of an algorithm running Tether, printers run Tether. And what I mean by that is anytime it starts to become depegged, which has happened in the past, Tether gets out their printing machine and just prints magically more tokens. Nobody really knows if they're actually backed by US dollars. They're supposed to be, but nobody knows. Why? Because they refuse to be audited. It's very much like the Fed, all right, controlling our current economy. Now, most people know the dollar is no longer backed by gold, although the illusion is still created that it is. Fort Knox continues to build more barbed wire fences and get more guards and helicopters and drones. But what is actually in that building? Just air. It's probably just air. And so that illusion, though, helps keep the value of the dollar real or unreal, however you want to look at it. It's perspective, right? But if the masses think that something has value, that's what gives it value. Even with cryptocurrency, it's just digital ones and zeros, but it's the collective placing a value on it that has given it its value. And that's what's happening with the dollar. And the Fed knows that they need to protect this illusion. So audit the Fed will never happen. Now, if it does happen, let's say that remote chances that it does happen, you're talking global, world, mass devastation and depression like we have never seen before. And so that illusion, if it's not kept real, if truth comes to the surface and people find out what is actually going on with the Fed, everything crashes. And the same thing here with Tether. Tether is a microeconomic version of the Fed, right? And so that illusion, they want to keep that illusion because if they ever do get audited, then you're looking at massive destabilization in the crypto space. Sometimes my thoughts go faster than my mouth does. So anyways, Tether right now is an illusion that has to be kept. If it's not kept, if Tether becomes depegged from the dollar, it will definitely affect the whole crypto space in the same way that UST did, only it will have much greater and much more devastating impact because Tether is huge. I don't know how many billions of dollars they say they are being backed by right now. So that brings me to my final point. I'm sort of getting long in the tooth here. My paid subscribers know, and I started this channel, this video production over here at the top. We were exactly at the top. How you guys have managed to be loyal and remain with me is beyond me, but gracias, much appreciated. I do appreciate the support. It shows me and it gives me the confidence that if you all are sticking with me during this bear market, during these bad times, what will happen when we enter into the good times, which is the area that I'm really good at. Trading up is where I have had most of my experience and practice. Being overall optimistic on crypto, it's hard to switch my mindset to a bearish sentiment, right? So that's partly why I have these lines drawn in the chart. I know that if we get below this line, we are in bear territory. Have we gone bearish yet? Well, we have to remain under here. And so, but I will be trading more negatively if we do pop back up and come to this ascending trend line. I'm not just going to assume that we go and conquer that again and get into bullish territory. I'm not a perma bull. I know that there are bear markets, and I have to respect the fact that this and the crash of UST and Luna could have been the catalyst needed to keep us in bearish territory and a bearish climate with bearish sentiment and bearish bias. And that's why at this point, my mindset has become shifted to look more for those bearish trades, shorting Bitcoin when we get up here, for instance, and hit our heads on that level. I want to be thinking of those kinds of trades for my paid subscribers. That is also why I put my subscription on hold. Okay, I got to recalibrate here, rethink this thing, and make sure that I'm giving you all the best strategy going forward that I can think of. Okay, but anyways, I was going to say all the way down, you guys have seen that I have not parked much of my money in stablecoin for too long. There'll be occasions where I think we're going to, maybe make a big old red candle and I'll park in a stablecoin for a short time till I can pick up something else. But I don't like to remain in stablecoin more than 10 to 20% of my portfolio, not only because I don't want to miss up movements like these green candles, but also because of the fact that stablecoins, and I haven't said it before because it was conspiratorial, now we can see that stablecoins can crash. They can be a risk. If you're parking 20% of your portfolio in a stablecoin and it crashes, it goes away like UST did, you just lost 20% of your portfolio in something you thought was safe. So in my opinion, the best strategy is to remain in cryptos that you believe are the future. Those are the cryptos with practicality, with functionality, with good tokenomics. All right, I try to trade into those. And if one of my cryptos remains relatively stable, while another one, I've got a little bit of a cough, declines rapidly, what I want to do is I want to sell out of that one and grab the other one. All right. And in this case, I'm increasing quantity of my token while the market is going down. And my paid subscribers have seen me utilize this strategy. It doesn't translate into greater US dollars. You all know that. It translates into greater quantity of tokens overall. So if you believe in crypto as the way of the future, you know that in the overarching view, in the long run, you're going to be in a much better place. Additionally, I explained my philosophy on stops and why I don't put in stops. And I told you all that it's because I believe that if I put in a stop, okay, let's say I put in a stop, I miss moves like this big green candle basically. All right. So if the market, drops like it did here, I get stopped out. My stop goes off. Now I'm in a stable coin. Then these surprise big green candles happen and they take off. And now I'm not in the market. Now I want to buy up here. But what happens when I buy up here? The market goes down. All right. Now let's say I get stopped out here on this red candle. The market takes off. Oh, no, I missed this bull move. I want to buy here. Then, the market drops again. All right. This is the way shakeouts occur. So I believe my best strategy is not to actually execute those stop limits and limit markets orders, and just to stay in my cryptos and kind of swap around. If one drops 7%, another drops 15, I want to take my 7% and go to the 15 and increase the quantity of my tokens. I believe that's the best strategy. However, that being said, I put my paid subscribers on pause because I don't want you guys following me in those kind of trades. It's a big risk. And as we see with Luna, I thought Luna was it was one of the largest cap cryptos, altcoins, and it was popular. I thought it was safe. I didn't put stops in, lost it all. That can happen. So you can lose it all as well. However, I don't think I would have the money that I would have put into Luna had I executed this stop strategy, because I would have never, I would have missed all of these big green candles, especially over here, stuff like this where you get stopped out and then the market just goes up like crazy percentage points. I would have kind of missed those, and that's the money that I made that I was able to put in Luna that I then lost. So it's kind of you gotta weigh out your risk. For me, the risk of getting stopped out is greater than the risk of losing it all. However, I've had to rethink that. Is the risk of losing it all actually greater than the risk of getting stopped out? So if I would have kept my spreadsheets like I do now, back then, I would be able to actually calculate that from a mathematical perspective. But I can't do that right now. I just kind of am taking a guess based upon the large amount of profits that I've made in the last 2 years. Okay, and the last thing I wanted to show you was another chart we can pull data from to, take a look at our overall broader market climate and where we could be going. So this is called the NASDAQ 100 stocks above the 200-day moving average. If I zoom out here on the weekly, you can see I've got a bunch of tag points circled. This is the percentage of those NASDAQ 100 stocks that remain above the 200-day moving average. Right now, you can see that we are in territory right down here by our support. We're around 15 to 17% of those NASDAQ 100 stocks. I'm not sure which ones they are, remain above the 200-day moving average. Everything else has tanked below that. All right. And these areas that I've circled all indicate these are points in the market in past history where we have had those V-shaped recoveries, or where we have drawn back significantly and then start to move up slowly. What I'm saying is these are areas where the markets have capitulated and started to recover. And you can see right now on the weekly that we are on one of those areas of support. Now, could we go down further? Yes, absolutely. The probability of us doing that remains, or the possibility of us doing that remains. However, we could also do this thing where we bounce, and this would all fall in line with the data on the other charts, where we bounce first and gain some percentage of this NASDAQ 100 that goes back above their 200-day, or at least hits the 200-day, and then we just get a running start and come crashing through and go down even further. All right, that's that level there is about 7.5% of the NASDAQ 100 remaining above the 200-day moving average. Anyways, I wanted to point this out because these are good areas of capitulation. So what I'm saying is the market is starting or has reached a significant area of possible capitulation, which could move us up again for the next 2 weeks or so. Maybe more. Maybe we see a V-shaped economy. It all depends on what happens with the Fed and their sentiment, what they're saying about raising rates. Again, 2 more times in the future. Right now, 0.5 basis point interest rate increases are priced into the market for the next 2 times. There is also additional significant data that we have to keep our eyes on this week, guys, and I'm reading off some notes here. Actually, let me just jump to the concluding chart here. All right. So, and then I'm going to close up with that economic data that we'll have to watch. So Luna UST might have been the catalyst needed to move the market deeper into bearish territory. We definitely saw that happen here on the chart when Luna crashed, UST crashed, so did Bitcoin, so did the whole crypto space. But on the positive side, it might also be a point of temporary exhaustion as these markets, much of the sentiment, especially in the crypto space, is I give up. Hopelessness and despair, fear, uncertainty, doubt. This has happened as many millions, billions were wiped out. People were not expecting this. Some people can't even pay their rent because they were UST backers. They were earning interest on that UST, that stablecoin, gone. Nothing. All right. That is the beginning stages of a bottom, guys. And so what happens here, I'm not saying this is the bottom, but what could be happening is we are starting to form the bottom and see this red line I'm drawing, and we could have a little smiley face right here and move back up. But again, the possibility exists that we head up and hit our heads on that ascending black trend line before we come down and kind of do this sort of thing. All right. The data is now showing me that we can get some temporary relief for a week or 2. That's what I'm seeing, though that might not happen. Look for us to hit our heads on that resistance. But I do expect us to remain in bearish territory unless or until the Fed gives us some economic data or relief. Now here, guys, are the Fed events that are coming up this week. If you want to pause this video and take a screenshot of this. Otherwise, I'll try to remember to post it in the description. Yes, I am going long on this video only because TradingView has not put me under the 20-minute limit because it has banned me. So this video is not even going out to my TradingView subscribers. So we're looking at manufacturing index, retail sales, industrial production, housing starts, building permits, jobless claims, Fed manufacturing, existing home sales. Why am I pointing all of this out to you? Because this all spills over into our crypto space. Believe it or not. Yes, it does. Absolutely. All right. So keep this in mind. Watch this data as well as Fed sentiment if there are any changes. Until the next video on Friday. Peace, y'all.